How do companies, really grow and adapt, especially in these complex, super fast-moving industries like logistics, where everything just seems to be changing all the time? It's a fundamental question, right? So today, we're doing a full-on exploration, a deep dive into the latest results from Mahindra Logistics Ltd, MLL as they're known. This is for their first quarter of fiscal year 2026, so the period ending June 30th, 2025. And we've gathered, well, pretty much everything we could find. Press releases, the detailed financials, investor decks, even their AGM presentation, a whole stack of sources. Our goal here is simple. Pull out the key insights, understand what drove their performance, where maybe they hit some rough patches, and crucially, what their strategy looks like going forward. And helping us unpack all of this is our expert.
Great to be digging into this. It's such a pivotal time for India's logistics sector. Massive changes happening. And MLL, being one of the big integrated players, offers a really a fantastic viewpoint to understand these shifts. These results, by the way, just got the green light from their board on July 21st, 2025, so it's fresh off the press, giving us a timely snapshot.
Okay, excellent. So let's jump right in. The big picture first. What are the headline numbers telling us about Q1 performance? And let's look at both consolidated, that's including subsidiaries, and standalone. And just a quick note for everyone listening, all the figures we'll mention are in Indian rupees. When we say crore, that means 10 million rupees.
Good point on the crores. Okay, so consolidated numbers.
Yeah.
Comparing this quarter to Q1 last year, pretty strong top-line growth. Revenue shot up by 14.4% year-on-year, hit 1,625 crores, so good momentum there. Their EBITDA, earnings before interest, taxes, depreciation, and amortization, a key operational metric that also improved, up to 76 crores from 66 crores.
Okay, so far so good. More revenue, better operational earnings.
Well, here's the twist. Despite that growth, their profit before tax, the PBT, actually showed a bigger loss. It went from a loss of 2.5 crores last year to 5.8 crores this quarter. And the bottom line, profit after tax, or PT, that loss also widened. 10.8 crores loss compared to about 9.3 crores last year. The earnings per share followed suit, a loss of 1.50 versus 1.29.
Okay. So selling more, earning more operationally, but ending up with a bigger loss. That points to something squeezing margins, maybe costs.
Exactly. And if we look quarter on quarter, so comparing Q1 this year to the immediately preceding Q4, the picture gets a bit more nuanced. Revenue was up slightly, just a bit, from 1,570 crores to 1,625 crores, but EBITDA actually dipped slightly from 78 crores down to 76 crores, and more significantly, PBT went from a small profit in Q4, just under a crore, to that 5.8 crore loss this quarter. The PCHALs also increased quarter on quarter.
Right, so the pressure seems to have intensified recently. What about the standalone MLL entity itself?
Similar story, really. Standalone revenue comparing Q1 26 to Q1 25 was up nicely, 1,346 crores from 1,157 crores. EBITDA also rose. But just like the consolidated view, standalone PBT and PAT both decreased compared to the same quarter last year. PBT down to 8.7 crores from 13.7 crores, and PAT down to 6.44 crores from over 10 crores.
Okay, so the clear takeaway seems to be solid revenue growth, especially year over year, but definite profitability challenges. Pressure on the bottom line across the board.
That's the headline, yes. Growth is happening, but it's coming at a cost, or perhaps facing significant headwinds affecting margins right now.
Fascinating. So let's peel back the layers. Where is this revenue actually coming from, and why are we seeing these profitability shifts? We need to break down the business segments.
Absolutely. The segments tell the real story. Let's start with contract logistics. This is clearly their engine room at the moment. Revenue here was 1,289 crores. That's a huge chunk of the total. And it grew an impressive 18% year on year. And importantly, the gross margin in this segment was also up 15% year on year, 4% sequentially. So healthy growth and improving margins here.
What's driving that strength in contract logistics?
It's mostly their 3PL business third-party logistics, basically MLL taking over and managing complex supply chain operations for other companies. They're winning new business, getting better at integrating services for specific sectors, and improving their yields, the price they get for their services. And there's huge potential here. MLL points out that 3PL penetration in India is still only around 5%. The global average is closer to 10%.
So lots of room to grow as more companies decide to outsource their logistics.
Exactly. Imagine all the companies still managing warehousing, transport, everything themselves. There's a massive runway for players like MLL. Operationally, they're managing a huge footprint, 21.1 million square feet of warehouse space. They highlighted the new Cummins India Logistics Center, which won an award, and new sites going live in Pune and Agartala just this quarter.
Okay, so contract logistics is the star. What about B2B Express?
B2B Express, that's business-to-business parcel delivery, essentially. Revenue here was 97 cores, growing 11% year-on-year, solid growth. And a nice milestone for them, the overall Express entity actually crossed 100 cores in quarterly revenue for the first time, so hitting that century mark.
Good momentum. Any challenges there?
Well, they mentioned that while volumes picked up, the yields, the revenue per parcel, basically were still under a bit of pressure, likely due to the mix of customers they're serving, maybe more competition on pricing. But their reach is vast. Over 19,000 PIN codes across India, 200-plus centers. It's a big network.
Got it. Now, you mentioned headwinds earlier. I suspect last-mile delivery, LMD, might be where we see some of that.
You suspect correctly. LMD is definitely facing challenges. Revenue was 85 crores, but that was actually down 5% compared to last year, a degrowth.
Down 5%.
Ouch. Yeah. And the gross margin erosion was even starker, down a whopping 42% year-on-year.
42%. What's causing that kind of pressure?
It's industry-wide, apparently. Intense pricing pressure, especially in the grocery delivery segment. It's just a fiercely competitive space right now, squeezing everyone's margins. Despite that, MLL is really pushing its EV-first model here. They're handling over 350,000 orders a day, using over 6,000 electric vehicles, so they're investing strategically in efficiency and sustainability, even while weathering the storm.
A tough segment. Okay, what about freight forwarding? International shipments.
Freight forwarding brought in 74 crores. That's up, but only by a modest 4% year-on-year. Growth here was kind of held back by, the ongoing geopolitical disruptions we keep hearing about, plus some tariff issues impacting cross-border trade. They also specifically mentioned headwinds for air and ocean imports because of new BIS regulations. That's the Bureau of Indian Standards. Stricter quality checks, basically, slowing things down at the border.
Right. Those kinds of regulatory changes can definitely impact flows. And finally, mobility services.
Mobility services, think corporate employee transport, airport logistics, that sort of thing. Revenue was 80 crores, growth was muted year-on-year. But interestingly, they actually delivered improved profitability in this segment.
Oh, how did they manage that with flat revenue?
They said it was down to winning some new clients, getting more efficient with their fleet, and just a tighter focus on operating discipline. Plus, airport passenger traffic grew, which helps that part of the business.
Okay, so quite a mixed bag across the segments. Contract logistics powering ahead, LMD under serious pressure, Express growing, but with yield challenges, and the others sort of stable to moderately growing, with mobility improving profitability. Given all of that, where does leadership see things going? What's their take on the quarter? And more importantly, what are the strategic moves they're making to navigate this and drive future growth?
Yeah, that's the key question. The MD and CEO, Mr. Hemant Sikka, acknowledged the mixed picture in his comments. He highlighted the Express business crossing the 100 crore mark as reflecting their shared purpose. He pointed to the overall 14% consolidated revenue growth, supported by, as we saw, 3PL, LMD. Despite its challenges, it contributed to the top line and Express. He mentioned freight forwarding being stable and the improved profitability and mobility, crediting that sharper operating focus. His framing was very much about navigating complexity with intent and architecting capabilities for future readiness.
So acknowledging the challenges, but framing it as building for the future. What does that look like in terms of concrete strategy?
They outlined several key pillars. First is digitization and technology. This seems huge for them. They're talking about embedding AI and machine learning in warehousing, in their EV modules, expanding their physical footprint, aiming for that 21 million SCFT mark, and leveraging ULIP.
ULIP, what's that?
Good question. That's the Unified Logistics Interface Platform. Think of it as a national digital backbone for Indian logistics. It aims to connect all the different players and systems, ports, transporters, customs, warehouses to allow seamless data flow.
So plugging into that national digital infrastructure is key for efficiency.
Absolutely. It's about making everything talk to each other better. Then there's operational excellence, like opening those new fulfillment centers in eastern India, Kolkata, Guwahati, Agartala, strengthening their network. They're also focused on integrated solutions and expanded offerings. They launched something called Pro Trucking, which is a new long-haul cargo solution, bundling services, basically.
And sustainability seems like a big theme, too.
Huge. Their sustainability and ESG focus is very prominent. They have a clear target. Net zero, aiming for carbon neutral by 2040. And they back it up with numbers over 1,660 EVs in their fleet, 4.1 million square feet of warehouses powered by solar, 47 million green kilometers driven annually. This really aligns with the whole Mahindra Group's global push on ESG.
Okay, tech, ops, integrated services, sustainability. But one thing really jumped out, that major financial restructuring, the rights issue, that seems significant.
Extremely significant. The board approved this rights issue. It's essentially asking existing shareholders to invest more money in the company. They're looking to raise up to nearly 750 crores, that's about 7.5 billion rupees, by issuing over 27 million new shares.
And what's the purpose of raising that much capital right now?
Well, it's usually to fund major growth initiatives, maybe acquisitions, strengthen the balance sheet, or reduce debt. Given their focus on expansion, technology, and integrated solutions, this capital injection will likely fuel those ambitions. The details. The issue price is 277 per share. Shareholders get the right to buy 3 new shares for every 8 they already own. The record date was July 23rd, and the issue itself runs from July 31st to August 14th, 2025.
So a big move to shore up capital and fund that future strategy, likely signaling confidence from the board despite the current profitability pressures.
Precisely. It suggests they see major long-term opportunities worth investing heavily in now. It strengthens their equity base, giving them more firepower. And one other small note on strategy, they also completed the voluntary dissolution of their wholly owned subsidiary in the UK, MLO Global Logistics Ltd, back in June. Suggests maybe a tightening of focus on core markets or operations.
Okay, so we've seen the numbers, the segment performance, the strategic vision, including that big rights issue and the ESG push. Let's try and connect the dots. What does this all tell us about where MLL stands in the whole Indian logistics picture right now? And maybe more importantly for you listening, why should this matter? How does it reflect broader trends?
I think what really stands out is this balancing act. You have a market leader like MLL pushing hard for growth, especially in promising areas like 3PL and Express, where they see huge potential. But at the same time, they're grappling with really intense competition and pricing pressure in other segments, like last-mile delivery. It's not all smooth sailing. The big rights issue is a clear signal, though. It shows a deep commitment to investing for the long haul, building scale, integrating services, leveraging tech, focusing on sustainability, even if it means navigating some profitability headwinds in the short term. They're essentially betting on the future growth of India's economy, the rise of e-commerce, the increasing complexity of supply chains, and the shift towards greener logistics. It's a snapshot of how established companies are trying to adapt and invest for a rapidly changing future.
It really shows a company investing heavily through the challenges, not just waiting for them to pass.
Exactly. And this reflects those broader themes. You see the massive infrastructure push in India, the digital transformation across industries, and the growing importance of ESG factors for businesses globally. MLL's story is, in many ways, a microcosm of those larger trends playing out.
So as we wrap up this deep dive, it's clear Mahindra Logistics is a company very much in motion, adapting, investing, building for what's next, even with those bumps in the road.
It absolutely is. And it leaves us, and you listening, with a really interesting question to ponder, I think. In this era where supply chain efficiency and resilience are just critical, how do companies like MLL keep innovating? How do they balance that constant drive for scale and integration with the absolute need to achieve sustainable profitability, especially in those super competitive areas like last mile?
That is the multi-billion-dollar question, isn't it? Something to definitely keep thinking about. Thank you for joining us on this exploration of MLL's Q1 results. Until next time, keep digging for those insights.